morning, ladies and gentlemen. A very warm welcome to you all on this wonderful start to the week as also to the month of December. We've had a stunning set of data coming in from GDP for second quarter, 8.2% growth. None of it was expected, and the market started with a gap up, a bit of a consolidation around 26,300. Of course, this is a fresh high on the Nifty as also on the Bank Nifty, where the digit has changed to 60,000. That's a real strength coming into the banking sector, and of course lots of strong tailwinds. So we are looking forward to the GST number today evening for the month of November, and a lot more data coming in from auto countries. To discuss this in a lot more, where the markets are headed, we are now joined by Mr. Ashish Chaturmohta, Managing Director for the Portfolio Management Services at the very well-known financial powerhouse JM Financial. Ashish ji is a veteran of the stock markets, a very dear friend, and someone who navigates the markets both fundamentally in terms of taking strong calls and tracking them on charts, that is technically. Ashish ji, a very warm welcome. बहुत दिनों बाद आपसे मुलाकात हो रही है, and what a wonderful day to have this conversation. A strong GDP print and a record high on the Nifty and the Bank Nifty. What now for the Lal Street?
Good morning, Shelji. So definitely, I think we have seen a very strong, print coming from the GDP data. We have already witnessed what is happening on the domestic front, whether it is in the form of the latest CRR cut which has happened and which has resulted in almost a strong infusion of liquidity into the entire banking system. Plus we have seen what has happened on the consumption side due to the GST rationalization, along with income tax bonanza which has been given and which is going to increase the overall, I think, spending to almost 4.5 lakh crore kind of number. So that I believe is going to be a big boost for consumption as an economy. And if consumption as an economy starts to grow, I think it is going to lead to a very strong credit growth environment, or I think and it will eventually lead to a re-rating in the overall banking sector or the financial services sector, whether it's a good quality NBFC companies, and we are seeing a strong growth in the auto numbers. So again, lot of these NBFC companies which are focusing on auto credit are also going to be a big beneficiary of this broad trend which is emerging due to liquidity infusion.
Okay, fair point. So at this point of time, Ashish ji, we see as you've been pointing out for a very long time, a sharp traction in PSU banking stocks. This is one of those rare winning trades that's running for the last 5 years or so. Now, what sense do you get from this sector after credit growth here exceeds that in the private banking segment? Is there more steam left? What are the PSU banks that you have at your PMS portfolio?
So very well said, Shelji. I think we should first look into a lot of these PSU banks from the operational parameters perspective. And if you look at from a credit growth perspective, PSU banks are showing very strong traction, and not just the corporate lending part, but if you look at the MSME or personal loans, we are seeing very good traction coming from a lot of these PSU banks, and some of them have also posted 13, 14, 15% kind of credit growth in this year. And if you look at from the quality perspective, if you look at the net NPA numbers or the slippage ratios, broadly they are in line with what your private peers are showing. So maybe the NIM of a good private banker could be maybe 50 to 100 basis point higher. But broadly, if you look at the operational parameters of a lot of these PSU banks are in comparison with their private peers. But if you look at from a valuation perspective, there is a very deep discount which is there. So most of these PSU banks today, X of their subsidiaries valuation, they are quoting at 0.8, 0.9, 1 time price to book versus the private peers trading at 2.5 to 2.7 times. So I think there's a scope for decent re-rating which can happen on PSU banks. So we are very well positioned ride this trend. If you look at from a technical perspective, clearly there is a relative strength which is being witnessed in PSU Bank versus private banks. So if you look at the year-to-date data, Nifty Bank must have delivered somewhere close to 13-14% return. Within that, ICICI Bank would have delivered 7% and HDFC would have delivered 13%. But at the same time, PSU banks have delivered a return of almost 29%. So you can see the amount of outperformance which PSU banks are delivering at this point of time. And still at current levels, we believe that strength is visible. So we would like to remain overweight in the overall PSU banks. As far as exposure is concerned, we continue to like PSU Bank BeES ETF because that's a proxy to play the entire basket. But apart from that, SBI would be our top pick in the if one wants to take individual bet, then SBI X of subsidies is trading at a very reasonable valuation, and we believe that stock has a potential to move towards 1250 1300 kind of levels in the medium term, purely looking into the short term to medium term data from a technical perspective as well.
Okay, so SBI, in case you are interested to tap into the PSU banking segment, already at a record high, remember, but still the valuation for SBI is dramatically lower than the broader Nifty. What talk about its private sector banking peers? That is something, and of course, as I have been pointing out, Ashish, do you remember the first purchase we did on the PSU banking ETF? If I remember correctly, it was 28-29 rupees. Let me see what the current price is. This, of course, as I have told viewers, is one of those great buys of PSU banking BeES. Wow, for the moment it's now 95.3, and of course, Ashish ji, आप ही बताइए, what is your entry level on Nippon India ETF Nifty PSU banking BeES?
So, we started recommending or accumulating this entire PSU Bank BeES ETF initially from 20 to 23 odd levels. But as you rightly mentioned, 28 was a level where we went a little more aggressive and added, in a very decent quantity into a lot of our, clients' portfolio, and we continue to hold it. And we, in fact, even at current levels, whatever fresh allocation is coming, we are giving reasonable allocation to PSU Bank BeES ETF even at current levels.
Okay, now ladies and gentlemen, what is really interesting is that from 28 to 29, it touched a high of about 89 rupees in May 2024. From 89 rupees, it slipped way back to 60. This was in this March 2025. And from March till December, from 62, it's 95. So essentially, it's a 50% return on an ETF. So you can well imagine how individual banks would have outperformed the index, but a great call, and it still holds value at about 95.67. This is what Ashish ji's view is. As we proceed further, Ashish ji, given the very strong tailwinds of JST rate cuts, interest rate cuts, a change in the income tax measurement, what are the 2 or 3 sectors where your PMS is overweight?
So definitely, I think if you look at the consumption boost, we firmly believe that this entire new age theme is going to be in traction. The reason being, if you look at the incremental discretionary spending is not going to be in a very basic item. It is going to be more for experiences, more for new age themes, and that's where I think a lot of these new age theme companies looks very attractive at this juncture. We have spoken time and again about Zomato, which is now eternal. We still believe that the room for growth for these companies is still there. They are they are trying to create new experiences. And if you look at some other names within the new age, for example, Paytm is one stock which we entered some time back, and it is doing reasonably good because the way they are narrowing their losses, the focus on the business has gone up significantly. And if you look at their merchants on the business has reached to the level of COVID level. So I think keeping this in mind, it looks like Paytm is back on trajectory, and it looks like this stock has a potential to get further re-rating. In the same space, there's a mid-cap company called Cartrade, which is into second-hand car sales, and they are kind of market leaders in the space. So we continue to believe this kind of companies will try to gain lot of top line growth, and with profitable growth which is going to come to these companies. So that's where I think Eternal, Delivery, Paytm, Cartrade, these are the names within the new age space which looks interesting, because even at current levels 25 to 30% kind of top line growth is being visible, and most of these companies have reached to a level where they have become profitable as well.
Right, car trade even at 3100 rupees. Of course, you must have gotten at a very reasonable price. I remember when it broke past its listing high somewhere in early of January. A lot of very smart funds had got back into the counter. But after doubling, does it still make sense?
So, Shalji, we look at it from this perspective. Let's say today, the overall market, these companies have just 10 to 11% kind of overall weight in the market. But the way this segment or these businesses are growing, where GDP is growing, let's say 6.5-7%, but these companies, these businesses are growing at a significantly higher rate, and most of them have seen lot of pain. There's a lot of consolidation which has happened in the industry, and they have become market leader in this space. So the probability of these companies growing at a faster pace is still remains, and that's the reason we believe the overall weight of these companies in the overall market cap can go up significantly, and that's the reason we would like to remain overweight in these companies till the time till the time we don't see any disappointing numbers or maybe change in trend. We have to ride this trend, and as you know, our style is to combine fundamentals with technicals, market dynamics. So we firmly believe the quarterly numbers, the yearly numbers are still in a good growth phase, until the time that trend is there. Price behavior is clearly reflecting good strength in an environment where 70% of BSE 500 stocks have underperformed BSE 500, and in that environment, if some theme is showing good strength, that's a reason for us to remain overweight in this space.
Right. We also discussed the defense space. Again, you have been one of these early entrants into defense about 4-5 years ago, and I distinctly remember talking about shipbuilders, about Hindustan Aeronautics in particular. Those stocks reached maturity level, and some money was taken off the table. Post Operation Sindoor, and the way aggressively the government has gone into beefing up defense infrastructure and increasing purchases. Anything that catches your fancy at current levels?
So definitely we are selectively positive on the entire defense space, and within this I think companies which have got very strong order book, have got strong execution capability, where the margin profile is not getting deteriorated, those are the companies which are in our which we hold in our portfolios. So for example, Bharat Electronics Limited, it's a very good play on the entire defense space, and electronics is something which is gaining lot of traction. Within that, BL has got a very strong order book, strong operating margin profile this company has been consistently maintaining, and the kind of operating cash flows this company is generating, it looks like that the trend is going to remain positive for a long period of time. Within this space, there is a private there's a player like Solar Industries, where at least 20% of the revenue is coming from defense, and that number is going to grow up significantly. So I think Solar Industries is something which is, after this correction, looks very interesting, and we believe one should ride these kind of trends. And some of the smaller names in this entire defense space, where the order book is good, maybe the working capital cycle is little elongated, but we believe that this working capital cycle eventually will come down, and that's where the return ratios will improve. So those kind of companies in the defense space looks very interesting. So my understanding is, at this point of time, the risk reward ratio for the entire defense space looks promising, but one has to be very selective in picking up the stock.
Okay. Ashish, so far we have discussed quality stocks in defense, Solar Industries, BEL, in the internet space, Cartrade, Paytm, Eternal. and of course the PSU banking ETF. This is where value lies according to you. Now, what has also happened, Ashish ji, is that this is a large cap bull run. But in portfolios we have mid caps and small caps. Everybody that you talk to is not really happy with this record high. Will this rally percolate lower? If yes, do you see mid caps and small caps recovering? If yes, by when?
So definitely my sense is, if you look at one broader data which says that our premium to the emerging market or to the world market has narrowed down to a very low level, and it has happened after many years. So my sense is, with this kind of GDP print, with this kind of consumption boost which we are going to take, which is going to happen due to GST, due to income tax, due to CRR cut and liquidity infusion, we believe this valuation comfort is very very well positioned at this point of time, where the emerging market premium has come down to a meaningfully low level, and where the earning growth expectation has increased in the next 2 quarters because of the recent consumption boost. So my sense is the risk reward ratio for the entire small and mid cap basket is looking very attractive, which has underperformed for last 9 to 12 months. As you rightly mentioned, 44% stock only within the BSE 500 has beaten the index, and only 30% stocks have given positive return. So these kind of concentration which has happened in the broader market is going to change, and we believe it is going to be more broad based rally. And keeping this in mind, it's a very interesting time to get into small and mid cap stocks at this juncture.
Okay, those stocks that we haven't discussed are in the mid cap and the small cap space, in the 5 or 6 you mentioned. What is the highest weighted stock in the PMS portfolio in the mid cap and the small cap space, Ashish ji, at your end?
So I would say that the entire capital markets as a theme is a little overweight in our portfolio, and within that also MCX is one stock which we have been holding, and we continue to believe that the kind of volumes which is happening in the MCX due to the sharp volatility which is taking place in gold, silver, copper, aluminium, zinc. I think MCX becomes a natural beneficiary of this mega trend which is emerging in the commodities market, and with the introduction of options market, I think there's further optionality to increase the profitability for MCX. So I think it's a kind of a monopoly play to ride this entire commodity cycle. So MCX is one such topic which we are holding in our portfolio. Within the capital markets, we are still very positive on the entire, I would say, wealth management and asset management companies. Within wealth management, Nuvama is one stock which we continue to like in our portfolio, and within asset management, Aditya Birla AMC, HDFC AMC, both are the names which looks very promising at current juncture.
Okay, Aditya Birla AMC, Nuvama and MCX from the capital market space, and the earlier ones from defense as well as from the PSU side we've already talked about. When we talk about gold and silver, Ashish ji, yes.
Yeah. So one more interesting thing which we believe is looking good is the entire CDMO and CRDMO opportunity, because as we believe the way the generic pharma business is growing, let's say 7-8%, but if you look at the opportunity or the tailwind for the entire CDMO and CRDMO space, we believe that this sector is going to grow at 17-18% kind of growth in terms of top line. Whereas if you look at from a EBITDA or PAT growth perspective, the growth is going to be significantly far better due to the operating leverage which will get kick in, and that's where a lot of these niche players who are transitioning from pure play API now working with lot of global innovators, and with this GLP-1 opportunity coming in, I think names like Shally Engineering or Laurus Labs or Neuland Labs, these are the stocks, or maybe something in the mid and small cap spaces, companies like Suven Life. This basket of the CDMO and CRDMO opportunity looks very promising. Only thing is, here we would not like to take a position in just one name. We would like to create a basket, because that's where the risk reward gets adjusted very reasonably, diversified, and that's where I think this entire basket of 4 to 5 good names within the CRDMO opportunity looks promising from next 3 to 5 years perspective.
Okay, you mentioned Laurus, Neuland. What was the third name that you mentioned?
Shelly Engineering and Suven Life.
Life. Okay, okay. Shelly and Life. Okay. I'm just writing this all down. The next time I'm going to speak to you about how price movements have happened in these 7-8 stocks that you mentioned. Now coming to the 8,000 pound elephant in the market, Ashish ji, gold and silver.
Yeah.
यहाँ तो मतलब कहानी बदल गई. 70% rise year to date, and there is no stopping ETFs, there's no stopping physical prices and physical demand. Is the rally done in silver and gold, or are better days ahead even now?
So Shalji, we have been, very positive on the entire trade of silver for almost last 2 years, and we continue to believe that both gold and silver, both precious metals, are going to show strong outperformance in days to come. The reason being, obviously, because of this global uncertainty, we have been seeing a lot of accumulation coming from central banks. So it's not just what retailers are buying or what India is buying. It's the globally there's a big trend which is emerging. Just to give you a data point, if you look at the size of Bitcoin market or the cryptocurrency market, it is close to $32 trillion. $3 trillion. Whereas if you look at the size of gold market, it is close to 32 trillion. But if you look at the incremental inflows in the US ETF, 44-45 billion has been put into Bitcoin, into cryptocurrencies, and 44-45 billion has been put into something like gold, which is almost $32 trillion. So which means there is going to be a lot more buying interest which will emerge in precious commodities like gold and silver. Now silver, because of its industrial usage, is also gaining more traction, because EV, semiconductor, your solar, everything, you need a bit of silver, and that's where a lot of demand is coming. But if you look at from a production to demand supply kind of scenario in silver, this is not matching, and that's where next 2-3 years there is going to be a lot of gap on this demand supply, and that's where a lot of buying interest is emerging. So yes, there was a speculative element which resulted into a huge jump in the prices, which got cooled off, and in the last 2-3 months we have seen decent amount of profit booking which came into silver, and again the trend is emerging, and the silver has hit a fresh all-time high, and this is a fresh all-time high after almost 15-16 years of consolidation. So my sense is this trend is going to continue, and from asset allocation perspective, we believe both gold and silver needs some decent allocation in one's portfolio.
Okay. Ashish ji, what of the Nifty 6 months from now? Because we will now start running into the budget. We have December coming in. A lot of good news will come from GST numbers, from auto numbers for the quarter gone by. Where do you see the Nifty, say, 6 months from now?
Definitely, from a valuation perspective, if you look at Nifty on a forward basis, is trading at 20 PE multiple. But if you look at from a earning growth perspective, it looks like next few quarters the earning growth is going to be reasonably good, because of whatever positive factors which we are witnessing. Plus, if you look at from a emerging market premium or a developed market premium, that premium has narrowed down, which makes India more attractive. Coming to a technical data point, clearly after consolidating for last 1.5 years, Nifty is now hitting a fresh all-time high, which means we have seen reasonable profit booking and then trying to retest the previous high. So the probability, and within that also, if you look at 70% of stocks have not participated in this rally, which means maybe the broader level Nifty is looking very strong, but at a broad base theme, most of the themes have underperformed and they've become attractive from a valuation perspective at this juncture. Keeping all this in mind, it looks like we are headed towards 29,000 to 30,000 kind of trajectory. Just if I look into the data perspective, my sense is Nifty has formed a very strong base around 24,800, 25,000 kind of trajectory. Until the time we don't see a breach below this, I think we are headed towards 29 to 30,000 kind of levels in Nifty.
Okay, on this very positive note, Ashish ji, we'll call it a day. I look forward to welcoming you to Delhi, and we look forward to catching up on old times. Thank you for joining us, and always the best of health and the best of markets to you and to everybody at JM Financial. Have a nice day, sir. That, ladies and gentlemen, was Mr. Ashish Chaturmohta, Managing Director for the PMS business at JM Financial. A very erudite man with lots of experience behind him, and he's bullish on the following themes, the following stocks. PSU Banking ETF is something that he recommends even now at 95 rupees. Amongst the internet space, there is still space to grow for Cartrade, Paytm, Eternal, and of course Delivery. In the capital market space, MCX, Nuvama, and Aditya Birla AMC are the top picks at JM Financial. And in the world of CDMO Pharma, Laurus, Neuland Labs, Shelley Engineering, and of course Suven Life catches attention. Thank you for watching. Please stay glued to Business Edge Television. There's a lot that's happening.
Joining us here is a guest of honor and his fellow golfer buddies here as well. First off, how has the day been so far? How many holes have you been